There you go, Amazon. There you go, Jeff Bezos. Coming through.
They came through.
Or Andy Jassy. It's still Jeff Bezos. It's still Jeff Bezos.
That's the number. That's what we needed.
15%. Wow. Those shares, 10% higher. Investors are liking what they're seeing at the print. I'll get you more. I'm digging into this now.
All right. Mackenzie Segalos next.
Wow.
Not bad.
This sucker's getting 250.
No, I just spent the past hour and a half saying that Meta is misunderstood, market's stupid, and Amazon was going to crush. So, Did you read through the press release?
No, I did. I still can't. Is it up yet? I can't.
Go to thinking out for the whole press release is up.
Give me a second.
Net sales increased 13% year over year. AWS 20% year over year to $33 billion. North America 11% year over year. International 14%. Operating income $17.4 billion. I mean, this just goes back to what I was saying last night and earlier. I mean, they're on their way to getting a 20% operating margin in the next several years. I think they're going to do it by the time 2029 is over. And this will be a $200 billion operating income company with $1 trillion revenue. I mean, this was a freaking smash. Absolute smash.
Okay, so a couple of quotes right here. Yeah, let me pull this up. Really important quotes from this perspective. Jassy says AWS growing at a pace we haven't seen. And guys, we'll get to all the other earnings in a second. Let me just get through this and then we'll get to the other one. Jassy says AWS reaccelerating to 20.2% year over year. He also says we are growing at a pace we haven't seen since 2022, which is music to the streets' ears, especially when it comes to AWS. So that's really important. And then to get into some specific numbers right here, let me pull this up. Revenue 180 versus 177, AWS 33 versus 32, operating income 17.4, net income 21.2. That's up almost 40% year over year. Cash flows up 16%, free cash flows almost 15 billion, and then guidance 206 to 213. That is ahead of the street expectation as well. And that is why Amazon is green. All right, we'll get back to Amazon in a second. Let me get to some of these other numbers. But Amazon right there, not too bad. Nice 8% move after hours. All right, so MicroStrategy, that's down 8%. I think that's more because of Bitcoin. We'll get their numbers in a second. Roku, nasty hit, down 6%. Coinbase down 4%. Cloudflare down 2%. Reddit down 1%. Atlassian's up 12%. Twilio's up 5%. First Solar is down 7%. Let me get these numbers in a second on these. Again, Amazon with a beat on the top and the bottom, 24% beat. Coinbase, 28% beat, 150 versus 117. That's a pretty nice beat by almost 33 cents. 18.6 versus 1.8 billion on revenue. So you've got Coinbase beating on the top and the bottom line. Stock still down. Crypto having a little bit of an ugly day. So you're getting some pain. Reddit, wow, 54% beat on EPS, 80 cents versus 52 cents expected. Reddit just went green, 222. There you go. EPS is now up 400% year over year. Revenue is up 68% year over year, 584 versus 549. You got a double beat and a hell of a beat on EPS for Reddit, which has only been public for a year now. So pretty incredible for them. Twilio, 125 versus 107. That's a beat by 17% on EPS. 1.3 versus 1.25 billion. That's a beat by 4% on revenue. Revenue's up 15% year over year. EPS is up 23% year over year. Twilio's up 6% after hours. Again, a lot of these companies beating on the top and the bottom, which is very nice to see. Amazon right there still holding 245, not really giving that up as AWS accelerates. Atlassian, another double-digit beat on EPS, 24%, 104 versus 84 cents, 1.43 versus 1.4 on revenue. EPS is up 35% year over year. Revenue is up 21% year over year. Coinbase is down. Roku is down. But these other ones are up. Let me get some coverage right here on Roku. And then we will keep going from there. Reddit is making the move about 5% right now after hours.
Roku shares plummeting. This despite earnings beating 16 cents per share versus the 9 cent per share analyst consensus EPS. Revenues of 1.21 billion were right in line with estimates. But if you want to look at the cause or one of the causes of the drop in the stock, the company's streaming hours, 36.5 billion. That's over $1 billion short of analyst estimates. The company is saying we are confident in our ability to deliver double-digit platform revenue growth while increasing operating margins in 2026 and beyond. The company did guide to Q4 revenues of $1.35 billion. That's just a hair ahead of the $1.32 billion estimated, and also guiding to Q4 adjusted EBITDA of $145 million, ahead of $131 million estimated. But it looks like there are those concerns about the streaming hours coming in short. That's really weighing on the stock here, John.
All right, yeah, that stock bouncing off those initial lows, but still down more than 7.5%. I think we got more on Amazon from Mackenzie Sigalos, including the guidance. Mackenzie?
Let's start there on guidance. So with Q4 revenue, it's in the range of $206 billion to $213 billion, putting that mid-range at 209.5 versus the $208.12 billion expected. And John, this would be their first $200 billion revenue quarter, coming just 5 years after it crossed the $100 billion threshold. Moving on to Q4 operating income, it's also a little light there, actually, in the range of 21 to 26 billion. So that's 23.5 billion at the midpoint versus 23.8 billion expected.
All right, so AWS still doing pretty well. Reddit looks like we get a reversal, folks. I don't know what just happened there on Reddit. It was just at 225. That is a little weird. That's a little weird. You got a big dump right there. Something has to have been said on the earnings, or either on a different part of their guidance. Western Digital, by the way, that one's running. That's up 4%. We have those earnings. I'll get that in a second. Reddit, not sure what happened. First Solar, they are down by about 6.2%. Amazon still holding the 240s right here. Netflix announces a split. Really? Like, okay, cool. Thanks, Netflix. That was kind of random. Netflix up 2%. Huh. I guess they wanted to wait till after earnings. 10 for 1. Maybe Meta needs to do that to save the day. Netflix right there. All right, a 10 for 1 split. Congrats if you own Netflix. Not too bad for the split. Reddit, I'm still trying to figure out why they took that dump. They were just at 230. Wow, 185. What is going on with Reddit? Let me see if I can find any information on this. Intel, by the way, is acquiring an AI chip company called Samba Nova. Netflix announces 10 for 1 split. Rocket, mortgage company, they beat Wow by 40%, 7 cents versus 5 cents expected, 1.783 billion versus 1.65. Pretty much every company so far today has beat on the top and the bottom, and they beat aggressively. Rocket right there after hours, that's also moving. Not sure what the heck just happened to Reddit. 184. We haven't seen that in a couple weeks, that price. Something they have had to said on their earnings is creating a hit. Let me see if I can pull up their investor relations. Amazon, I still don't have the press release. Should begin in a second. Something is getting hit. Sam, any thoughts on something you've seen from Amazon so far?
Haven't dug
Or is it just AWS?
Well, AWS was the one I was looking for. I'm actually basing it on a post that I'm seeing online because I don't see it in their press release on the website. So trying to look for that right now. Maybe it's on Stock Titan.
Okay, we'll check that in a second. Let me pull this up. Do we have? Okay, here we got some coverage on Reddit. Give me 1 second. Let's pull this up, guys.
Of 51 cents per share, revenues of $585 million ahead of estimates of $546 million. The company also guiding to Q4 revenue and EBITDA in ranges ahead of analyst expectations. I just spoke with CEO Steve Huffman, who told me that Reddit's ad business continues to outpace its peers with 74% year-over-year growth and 75% growth in total advertiser count. He said AI is helping across the board to make better recommendations and do more efficient moderation. And when it comes to licensing to AI companies, Huffman said Reddit can be a big AI winner without all the typical AI costs. Now, John, pivoting away from Reddit, shares down about 3% now. I just want to hit some news on Netflix. Netflix just announcing a 10 for 1 stock split that will be effected through an amendment to the company's certificate of incorporation, and that is set to be as of the close of trading on Monday, November 10th. We see Netflix shares up about 2.5% on this news. Back over to you, John.
All right, but thank you, Julia Borsten.
Okay, still not sure why Reddit's getting hit. Amazon's still holding the 240s. BM&R, I don't know why that's up after hours. Is Ethereum moving at all? ETH it's up a little bit from 3650. Maybe that's why BM&R is moving. Yeah, you got a little bit of a red candle right there, or a green candle, but not sure why. Reddit, I mean, everything, I'm looking at their website right here. I don't see anything crazy. Steve Huffman, Reddit provides something rare on the internet. 444 million people come here each week for authentic conversations they can't find anywhere else, and increasingly engagement with the brands. Revenue's up 68%, ad revenues up 74%. They're profitable. Net income 163 million. That's up triple digits. Gross margin 91%. Free cash flow 183. Got to be something in the guidance that could be causing some pain right here. But Reddit, that was a pretty big move to the upside, and now got the reverse. Coinbase is getting a little bit of a move after going red. Coinbase now up 4%, 3.28%. Coinbase did beat on the top and the bottom. We'll see if there's anything specific right there on Coinbase. But you do have a 28% beat and then a beat by 4% right here. MicroStrategy, I don't see their earnings yet. Let me see if I can pull this up. MicroStrategy, do I have it? I don't have it yet. Let's do a couple others before we do MicroStrategy. Also, we got Apple in about 5 minutes. Or is it at 4:30? Might be at 4:30. We'll have Apple soon. First Solar, they beat on the top, 424 versus 422. Beat by 2% on the bottom. Revenue's up 80% year over year. EPS up 46% year over year. You got Coinbase now getting more into the green. But First Solar did get a beat. And then you had Zillow with a 100% beat, 4 cents versus 2 cents expected on EPS, 676 million versus 670. EPS up 150% year over year. Revenues up 16% year over year. Again, the rate cuts should be rather bullish for Zillow. Zillow going green after hours as well. Cloudflare is pumping. Okay. Cloudflare, there you go. You got to move. Let's see if I have those numbers. Don't have those numbers yet, but the street obviously likes it.
Reddit just went green.
Reddit just went green?
Yep.
Yeah, that's weird, right? Like, do you have any logic for why?
No.
Did that?
I mean, it's algos, but Reddit does this all the time. So after earnings, makes some crazy moves. Cloudflare's up 7%. Wow. Must have been really good earnings.
Okay, Cloudflare revenue 562 versus 544, EPS 27 cents versus 23 cents. There you go. There you go for Cloudflare. That is what's causing your move right there. And that's why that one is getting green. Cloudflare 238. That's up 4.7%. I still don't have the Amazon press release, so we can't go deeper into the numbers. Oh, now we got it. No, now we don't, because the sitemap is not working.
Admit, it's on Seeking Alpha. I told you that.
No, but is that Amazon's press release, or is that Seeking Alpha's summary of Amazon's?
Yeah,
I don't. All I see is the headline.
It's got to be the press release, because if go to the link I'm sending you in private, there's no way that they made this a freaking. There's no way. It has to be the original one because it's so in depth.
You're good. Well,
you're right. Yeah, it is.
Stock Titan too, so that one has.
It's been out for like 20 minutes.
Yeah. Okay. Got it. Cool. All right. Cool. So net sales increased 13%, 180 billion. North America up 11%. International segment up 14%. AWS again 20%. That was the real number that we needed to see. Reddit going back green. I don't know what the heck's happening with Reddit, guys. Back above 200. It went from 230 to 185 back to 203. Something's going on with that one. Operating income 17.4 billion. That's flat year over year. North America 4.8 billion. Jassy, we continue to see strong momentum and growth across Amazon as AI drives meaningful improvements in every corner of our business. AWS is growing at a pace we haven't seen since 2022. That's really why I think the street's excited. Re-accelerating to 20.2%. We continue to see strong demand in AI and core infrastructure, and we've been focused on accelerating capacity, adding more than 3.8 gigawatts in the past 12 months. In stores, we continue to realize the benefits of innovating in our fulfillment network, and we're on track to deliver to Prime members at the fastest speeds ever again this year. Expand same-day delivery of perishable groceries to over 2,300 communities. And then they talk more about their Trainium 2 chip. I mean, we'll dig into the numbers, but on the top line, this is what you needed to see. And that's why Amazon is holding this 240 level. Yes, Netflix did have that stock split. And that's why that's helping Netflix right here. MicroStrategy. Okay, let me see if we can pull up MSTR. I don't officially have it yet. Let's pull this up. Again, MicroStrategy, they have FASB accounting now, so it's kind of a different way to think of their earnings. Amazon, wow, 250. By the way, there's Cloudflare, 17% beat on EPS. These companies on EPS are just like unbelievably outperforming. And then 3% on your revenue. Well, we didn't hit 250 yet, but we got close to it. 244.75 still right there on Amazon. Coinbase down 2%. Roku's getting dumped. MicroStrategy is, wow, MicroStrategy's down. And that's not just because of Bitcoin. Feels like that's because of something else. Still waiting on Apple. Robinhood making a little, that's weird. Robinhood and BMNR. Wow, Robinhood 137 to 140 after hours. BMNR almost 43, back up to almost 46. Both crypto derivative plays, but MicroStrategy not really getting it. I mean, it got 254 to 260, so I guess there is a bounce there, but it was at 280 at 4 p.m. on MSTR. Coinbase just bought 300 million worth of Bitcoin. Wow. Okay. I guess they're putting Bitcoin on the balance sheet. Yeah, that is confirmed. Coinbase buying 300 million of Bitcoin. Okay. That's wow. Coinbase buys 300 million. Okay, so Coinbase is now officially, I mean, I think it's been on their balance sheet to an extent, but not at the level that we're seeing it right there. That's $333 million for Coinbase. There's that green candle right there. Coinbase, there you go. That's getting the move right here. Apple's at 4:30, guys. So we got 10 minutes for Apple. We're going to see what Apple says. But Coinbase still making the moves. Amazon right there at 244. Apple's up 1%. Twilio got a 5% move. All these companies that pretty much beat. First Solar, they had a miss and a beat in the solar space. That one's down 5%. Netflix pumping off of that 10-for-1 split. And that's why that's getting a little bit more of a move. Let's get a little bit more coverage right on Amazon, and then we'll keep going from there.
Or not, they seem to be hanging in there quite well.
Yeah, I think for any company, especially in that space, whether you want to think about it as tech or tech adjacent, because consumer discretionary, at least with Amazon and Tesla, they get sort of woven in with the broader tech space. But anything regarding the sharp focus on capex, I mean, clearly that's been the story so far this year. That's where this narrower base of U.S. growth that we have, and the driver of growth, it's clearly been confined to that. And I think that's why capex has been so much under the lens, so far this earnings season. So to your point about what is the stability in the report that Mackenzie was just talking about, what are the stable growers for companies and revenue? What's that revenue generator? That's not going to be maybe as cyclical or as in focus as capex, because you almost think of it as a double-edged sword a little bit, where if they continue to raise their estimate for what capex is going to look like, there are concerns, and we've seen a lot of these blips in the market and corrections over the past couple of years, driven by some of the concerns about that upping of the number of the forecast for capex. But on the flip side, if they do start to pull back a little bit, there's maybe a little bit of a concern of what do they know that we don't, or what do they see in terms of some of the concern about that spending. So that's why I think to the point around what is the stability in terms of revenue generation and overall profit margin generation, I think that becomes more of a focus for earnings.
Sure. All right, you have Trade Representative Greer who's speaking right now. We got some quotes from him. Not the most bullish quotes for NVIDIA. Greer says, we spoke about chips with President Xi broadly. Blackwell is not on the table for China right now. Blackwell not on the table for China right now. We spoke with China. Where is NVIDIA? Got a bit of a red candle after hours. Street's not loving that news, still holding above 200. But I mean, then again, the $500 billion guidance didn't include China in the first place, so that's okay. MicroStrategy, all right, missed by 13% on EPS, 842 versus 967. Beat by 10% on revenue, 128 versus 116. MicroStrategy got a miss on EPS based on what the street expected. This stock not really moving that much after hours. Again, MicroStrategy to me is more so just it's like BMNR, right? Like if Bitcoin goes up, MicroStrategy goes up. If it doesn't, it doesn't. So I don't know how much the earnings actually matter for MSTR. It's up 2.23% after hours. The reason it was down 7.5% is because Bitcoin took a 3.5% hit today. Bitcoin recovering a little bit after hours. Bitcoin right there at 106.9. It did get all the way down to 106.2. But Amazon really the story of the day at 245. Microsoft up just a little bit after hours. The 128 million of revenues coming from their software business, which I still don't understand how they sell business analytics tools, but nonetheless they do. And that's why they have that revenue. Apple is going to be in 6 minutes. All right, so we did the Amazon pump or dump poll. Let's do the Apple poll and see what people think. 77% of you said Amazon outperforms. So we're going to see Apple's got some work to do if it wants to beat Amazon's performance today. But Apple, what are we thinking, folks? Pump or dump? Let me know in the chat if you own Apple. First of all, congrats to everyone who owns Amazon. We've been talking about this one for a while. Sam, this is his biggest position. Steve, I think you and I have had, 3 or 4 streams dedicated talking to Amazon. So
I'm a long-term shareholder. I mean, I have owned this since before the split. Okay, like long-term Amazon bull here.
You've owned it more than half the people watching, probably.
Dude, I've owned Meta since 2012.
Actually, hold on a second. Wait, they just had the split a few years ago.
Well, the thing about these big
wow.
The thing about these big tech companies is that, I think a lot of us are aligned on the fact, and people in the chat as well, that 2026 these companies are probably going to keep getting bigger. And so when you get an Amazon that hasn't moved all year, I mean that's really why I got interested. Outside of the fact that it's Amazon, it's like, wait, this is flat all year. And then when you look into it, you're like, oh, they have a couple issues with their market, stuff that can be fixed, stuff that is not.
Keep in mind, Amazon, Meta, Alphabet, they're deploying the amount of capital that 99% of companies will never see in their lives or in their existence. Okay. Who is going to compete with them in 3 or 4 years from now? Nobody. Yeah. They are going to be the nuts and bolts of everything technology. They're going to be the backbone infrastructure. Nobody can compete with them. They're just going to get bigger. And to think that 3 months matters with something selling off with one of these companies is crazy to have that mindset. And last night was a disgrace for anybody that thought Meta deserved to be down where it was.
No, I agree. And the other thing about Amazon, we keep talking about this robotics revolution, and so does Jensen. I mean, I don't know what other company is more infiltrated with robotics other than Amazon. If that increases their operating margins by even a couple of percentage points, that's tens of billions of dollars of net income every quarter that they're adding to the bottom line.
So Sam and Amit, did you see the special on Amazon last night with the Tritium chips and their new data center?
I watched a little bit of the interview. Yeah.
Crazy.
Yeah, and that's the other thing. They've got Anthropic and a lot of these other foundation model companies buying their chips. So, I mean, that's also important.
Where's Marvell after ours?
Where is Marvell? They work with Amazon a lot, right? Marvell, that's got a bit of a pop.
Yeah, that's nice.
All right,
they
so
design the chip, so
Steve, what do you think about Apple? Pump or dump?
I think it's going to pump.
Why?
Because I think that the iPhone cycle was dismissed as a nothing burger, and I think that it's going to come out that it was better than expected. I think on a year basis, because this is their fiscal year, this is their Q4. I think it's going to be good numbers, and I think they're going to be bullish going into the what we consider Q4 and next year. I think that all they have to say is they're doing something with AI, and the street's going to eat it up because nobody expects anything from them with AI.
I think that's very fair. And I also think that if Siri is going to be that agentic tool that all of us use, and Tim Cook can give any guidance on how big that can scale in 2026, that would be very exciting for Apple. Sam, you agree with Steve? You think we're pumping on Apple? Oh, you're muted.
I would argue that might be priced in. I think that's the assumption, that they are going to accelerate phone sales. I mean, it might go up, but I don't know how much it'll go up unless they seriously surprise people. But I think analysts have already baked that in, that you're going to have that reacceleration. I mean, that's why I'm in Amcor. That's part of the reason why I'm in Amcor is because it's mostly the mobile device expanding. So I think if it's anything, Amcor is probably going to benefit off of that more than than Apple itself, especially since Apple is a customer. So we'll see what happens with that one.
Maybe pump or dump is the wrong terminology. Maybe up or down is better terminology.
Correct. Yeah, just increase your volume a little bit, Sam. That should help.
It should be fixed now.
That's a little. That's
Yeah.
a little too. That's a lot. Got to just get it near the middle. The reason MicroStrategy is moving, guys, is because they just said that they are assuming Bitcoin will be 150 by end of year. They are assuming Bitcoin will be 150 by end of year, $150,000 a coin. So I think that guidance is getting the street to say, all right, if MicroStrategy is assuming that, and they continue to acquire, when you work out the MNAV, maybe that gets to a more attractive price. Still down a lot for the day because Bitcoin took a hit, but they are still assuming. How companies have to give guidance for like how much capex they're going to spend. MicroStrategy, they give guidance for like where they think Bitcoin is going. So I think that's why it's running, or that's why it's made its little V shape. But there could be another reason, but that seems to be the reason that I'm looking at right here. 270 on MicroStrategy, up from 254. That means ETH at least 6K. Yeah, I mean, you would imagine that would be very good for Ethereum, but we have to see if that can end up.
Bitcoin bounced like $1,000 though, so maybe
where's
that might be
Bitcoin
helping it too.
Bitcoin. Yeah, well, that's true. 107. No, you're right. 107. Yep, you're right. That is fair. All right, Apple, we should be getting results. We're down. We're down. She's going red, kind of 270 to 265. That's not that crazy. Let's see if it gets worse or if it reverses. Apple's implied move is 3%, so it should not be as volatile as an Amazon. I don't have the numbers yet. We should be getting it any second. Apple, are we still red? We're still red, 264. Again, this was Apple all of last week, so it's not really a dramatic decline. Oh, we got it. All right, here we go.
Beats on the top and bottom lines here. Let me go through. There's a lot to unpack here as we see the stock down about 3% on first blush. EPS was a beat, $1.85 compared to $1.77 expected. Revenue, a small beat here, 102.47 billion. Street wanted to see 102.24. Now, iPhone revenues, it was a miss. That might be why we're seeing some negative reaction here, but sales were still up 6% year on year.
This is the first quarter in about 3 quarters that they missed on iPhone revenues, even if sales are up overall.
At 49.03 billion. Street was looking for a little over 50 billion. Now, services, this is, of course, the big growth engine for Apple. It was up 15% year on year to 28.75 billion. That's a slight beat here. Street wanted to see 28.17 billion. And by the way, this is the end of the fiscal year. This is the first time the services business booked over $100 billion in a year. China sales, they were down about 3.5%. However, we did get some guidance this time ahead of the earnings call. I was just back there in Apple Park talking to Tim Cook about this. He was literally beaming about this guidance. December quarter revenue, they are saying it's going to be up 10 to 12% year on year. And iPhone revenue for the December quarter, they're now predicting up double digits year on year and saying this is going to be the best ever sales.
Guys, that's a big deal. Apple grows like 4 to 5%. So a 10 to 12% quarter is a literal double of the last 2 years of their growth rates. I mean, you can understand why he was beaming if they're guiding for 10% growth.
For the iPhone in the December quarter. So really strong guidance here, despite maybe little pockets of weakness in the September quarter results. And then as far as some other data here, I did talk to Tim Cook about those results and talking about the demand for the iPhone 17. I know Dan Ives was just talking about this. He even said there was demand for the iPhone 16 at the tail end of that life cycle. Here's what he said. On the 16 and 17 for Q4, several models were supply constrained, and currently we're supply constrained on several models of the iPhone 17. That is, again, why we're seeing such strength there in the guidance numbers that they gave us. As far as China, Tim Cook telling me, quote, we expect China to return to growth this quarter because of the reception of the iPhone there, or the iPhone 17 family. And then, of course, we had to catch up on artificial intelligence. Tim Cook telling us that big AI update to Siri is still on track to launch next year. And also, we talked a little bit about integrating some other AI models in there. There have been so many talks about whether that's Google or what have you. He told us, quote, in terms of the integration, we've integrated with ChatGPT, and our intention is to integrate with more people over time. No specific partnership to announce today, but you can think of it as more coming. So a lot.
Okay, so the street pretty excited about those numbers. Steve, any raw reaction to hearing that?
Yeah, I need to go through the quarter. The press release isn't actually out on Amazon's website. There's a lot to need to unpack with it, but I think Amazon just gets bigger. I mean,
You mean Apple?
I'm sorry, Apple. Is anybody getting rid of an iPhone? Is anybody not paying for storage? I mean, I'm doing both.
Yeah, but I'm sure those analyst projections or estimates for iPhones, like they went up. So if they were flat, then it would be just fine. But I mean, what is this, 1% move on Apple?
You're saying it's priced in, basically, Sam.
Yeah, I think it was priced in.
Well, I agree. It probably is priced in. I am really happy to see that 10% growth guidance for Q4. So EPS 185, revenue 102, services revenue 28.7, China revenue 14. There was a miss on China and a miss on iPhone, which is not great. But the guidance for Q4 seems to be way better than expected. Stock's basically at all-time highs. So as you said, Sam, it's not that big of a deal.
And you know what? This is bullish for the market because ultimately they're going to generate more profits, and this is not going to be a drag on the S&P.
Apple is 7% of the S&P, so it is very important to make sure Apple does very well. We'll get some more coverage on Apple, but let me see some of these other stocks. Roku's still dumping. We'll go deeper into their numbers. Not the best. Coinbase down 5. Cloudflare was up a little bit more. That one's taken a bit of a hit. Reddit, I don't understand what happened today. 230, 185, now back to 200. Still was a good quarter. Atlassian, software company, that's up 7%. Lumen's down 2%. Twilio's up 7%. Rocket, double-digit EPS beat, which was good. Netflix, again, there's the split. Everyone's been waiting for it. I mean, how much easier is it going to be to buy 100 shares of Netflix now? Instead of having to pay $111,000, you can pay $11,000. Sell some covered calls on it, so that's going to be nice. But you got Netflix up 2%, and then Zillow up 2% as well. Amazon's still moving, folks. She's got a date with 250.
Here's a question. Did anybody buy anything today?
I took advantage of the meta dip a little, but outside of that, no.
I bought a little bit of iron. That was really it. I didn't really do anything. I bought meta last night, so.
I love that you guys are in meta. I love it.
Yeah, well,
I've been in meta since 400.
Yeah.
Love it.
Riot got a beat, EPS 26 cents versus 13, 180 versus 172. So you have a 100% beat, so triple-digit beat on EPS for Riot. This is another Bitcoin miner turned data center company. Riot stock after hours up 5%. So you got to move on Riot. Let's hear from Dan Ives on this Apple move.
Hearing from Tim Cook about the holiday quarter in the iPhone.
This stock's going to be green. I mean, ultimately, if you look at that guidance, what you're seeing in China, remember there was only 1 week of iPhone 17 in the quarter. Everyone's focused on December, and that's very robust in terms of what we're seeing on iPhone demand specifically out of China. And then you look at what I believe services, massive double-digit growth. Look, you go back to the last 6-9 months, company back against the wall. Now you have this number. And then look, what I believe, everyone's playing for AI. You look at Amazon, look at the hyperscalers. You see what's happening on authentication. And we see on Orbs. I think you also see on CrowdStrike and some of these cybersecurity names. Apple's going to get into the AI party. And that, I believe, is worth $75 to $100 a share. If you're an investor right now, I think it's a pound the table moment for the stock.
Pat Moorhead, Steve Kovac reporting there that Tim Cook says Apple Intelligence is on track for them to deliver as they promised next year. You combine that with the holiday season that they're projecting for the iPhone. How does this set Apple up, do you think?
So, John, it's really going to depend on the installed base that can't run Apple Intelligence. And as we progress, every slip of Apple Intelligence, more of these iPhones can support it. A year ago, had we been in the same place, I would have said it would make I think I was talking along with Dan Ives about a super cycle, and it just didn't happen. So I don't.
To Sam's point, it looks like that super cycle might finally start to get priced in, and that's why Apple is making a move. Apple right there goes green, 273 from 263 to 273. Apple, even if you don't own it, very important for this company to do well as we want to keep this bull market alive. Dexcom, this is down 5%. This is a company, I believe, that helps with glucose monitoring. They have a beat on the top and the bottom, 7% and 2%. 7% EPS, 61 cents versus 57. 2% revenue, 1.2 versus 1.18. EPS up 40%. Revenue's up a decent chunk. It looks like 120%. That stock, however, is flat, or sorry, is down.
Can you zoom out on that chart? Go 5 years real quick. Wasn't Dexcom up like a lot more?
Yeah, in summer of 24, they got schmacked pretty bad.
They do the glucose monitoring for diabetes, right?
Correct. They do. Wow, Amazon. She wants 250. She wants 250.
How about this? At some point in 2029, Amazon's going to be back to 550 or 600.
And that's assuming what, $1 trillion in revenue?
Trillion revenue, 20% operating margin, 200% operating income, more than double NVIDIA's current operating income. Amazon was 2.4 trillion earlier. NVIDIA was over 5 trillion. There's no reason to think this can't become $5 trillion company in the next 4 years. And I may even be conservative at that.
I agree with you. You know what I'm happy about Amazon? This was another collective win for all of us.
Yes.
Because about a month ago, all of us, you, me, Tanner, Chris, Sam, all of us were like, this is stupid. This is one of the most important companies on the planet, and it's down 3% year to date. Like, this doesn't make sense. And I think this was a pretty collective effort. It wasn't the hardest in the world, but still, to get through, the nuts and bolts of it, all of us came to the conclusion, this is a buy.
It's not often where all of us are all on the same side of something, and this may be the universal one. I can't think of anything else that's universal.
No, there's one more. We might all get a lot of shit for it. For being BM&R.
No.
Sam's like, don't put me in that bucket.
Don't put me in that. That was always a trade for me. I stopped myself out of my position.
Sam's like, no, that's you guys, not today.
I even said it on the stream yesterday. Like, look, the real trade when it comes to crypto are the hard coins.
Dude,
like
Sam,
that is the real one.
You're supposed to get run over under the bus with your friends, not throw them under the bus.
I'm sorry. I like money more. I don't want to lose my money.
I bought more Ethereum and more BM&R today.
All right, there you go. No, but in all seriousness, BM&R, we'll see what happens with that. That's more crypto leverage. This is like a fundamental company, and I think we did some work over the past month, and we kind of came to the conclusion this makes sense. Wow, Apple all-time highs, folks, 275.
Let's go. Looks like Stevie may be right.
I thought Amazon was going to 250. Come on.
Look, this is bullish the stock market because think about what I've been saying and what everybody else has been saying. If big tech continues to get bigger, it's going to drive the market higher, which is beneficial everything. And if their product offerings get better, that's going to create productivity and efficiency gains for the broader market. And you could have a scenario in 26 where big tech goes higher, but you also get a broad market rally at the same time. So I'm starting to really think S&P 8,000 next year is not crazy.
Apple 276, folks. I mean, I don't own it. Let me know in the chat if you own it. I think Steve's actually the only one of us that owns this one.
I'm probably the only one that owns it.
You're probably the only one.
I technically own some. I own a lot of the SP 500. So.
Oh, Sam, dude, Sam's just weaseling out of everything today. Like, I don't know BM&R. I have exposure to Apple. He's just.
I got exposure to a lot of stuff through the SP 500.
Oh, but I mean, do you actually own?
No,
the stock?
but owning it directly.
No, I don't own the stock.
Okay, there you go.
I used to, but I don't own it anymore.
I'm in all of it.
What do you say, Steve?
I'm in all of it. I own every one of the Mag 7 directly.
Yeah, well, that's fair. Apple right there just hit 277. Let's get a little bit more of an update on the gross margins, and then we'll keep going from there. Folks, we got the call in 15 minutes for Amazon.
Assertions there. How much, Steve, do you expect to hear Tim Cook talk about that on the call? Where, in your view, does that factor into Q4?
Yeah, that is going to be a big thing on the call. So while we did get guidance, we still don't know what the tariff impact was for the September quarter. We'll get that on the call. They had estimated a bit over $1 billion. So we'll see where that actually fell in. And then, yes, some guidance towards the impact that they're expecting for the December quarter. Presumably, it would be higher just because it's a higher volume and a bigger quarter. I did want to go back to something that Patrick and Dan were talking about, though, about the super cycle and whether this is AI driven. One of the questions I asked Cook about the 17 cycle was, what's different this time? What do you see the momentum drivers as? And he did mention Apple Intelligence as one of them because, to their earlier point, you do need one of those newer devices in order to do this. So if the Siri upgrade does live up to the expectations and it does finally play out the way Apple has promised, we could see some more positive momentum behind there. But he also did credit things like design and new form factors and things like that as also behind this as well, guys.
I already kind of forgot what it was supposed to do. Steve, thank you. Patrick, thank you as well. Dan, stick with me for a bit. Up next, we're going to dive deeper.
All right, so those gross margins not doing the worst either. Real quick, let's get this Roku update because I know a lot of people are still wondering what's going on with Roku. Here's some coverage on that.
Roku moving in opposite directions in overtime. Let's get back to Julia Borston. Julia?
Yeah, Roku.
Wait a second. Is Apple at 280? Oh my goodness.
The market's basically making a new all-time high after close.
Wait, where's the S&P?
Amit, I gotta say it. Are you ready?
Go ahead.
Higher.
Good. Higher. It is higher. 680. So the S&P closed at 680. Apple alone is bumping it up $4. Apple and Amazon. But Apple, my goodness, 281. Dude, I think it's that Q4 guidance. I think it is that Q4 guidance.
And think about this. What if Meta rebounds next week?
Oh,
Think about where the S&P goes then.
whew, that would be beautiful.
You know what I mean? Like Microsoft sold off, Meta sold off. If they rebound next week and these companies just stay where they are, keep going, and you get a little pump on NVIDIA, market's going to be at 7,000 next week.
If so, then this was a bear trap throughout the entire day. I mean, if we actually get a Meta rebound as well. iPhone 49, Mac 8.7, iPad 6.95, other products 9, services 28.7. I mean, the only thing that missed was iPhone. And guidance, I guess the street didn't have it priced in. 282.
Wait,
on
bring
Apple.
that back up. What was services?
27 point or 28.
Amazing.
Yeah, 28.7.
Amazing. I mean, really think about this. And this has been really the crux of my Apple thesis for a while. Services came out of nowhere and they basically built what is now in excess of 100 billion revenue run rate business inside of their company over the past 7-8 years. Out of nowhere.
Yes. Because they
And that's without anything with generative AI or cloud offerings for businesses.
Yeah, when you have the distribution, and look, if they start charging $10 a month or $20 a month for some AI add-on, I don't know what it's going to look like, but if they can get a couple percentage points of their 2 billion install base to convert, I mean,
or if they just increase their current services package by $4 or $5.
Yeah, perfect. There you go. Yeah, $5 extra for more AI services. Yeah. Yeah, and Rudy in the chat, high margins on services as well. And then, I mean, do you guys know how much cash they have now? I have the new number. Do you guys want to guess?
Is the new stack out from them? Hold on.
Sam, you want to guess? How much cash do you think Apple has now?
I don't know, man. I'm waiting for 250 right now. I'm like looking at the candle. I'm waiting.
132 billion in cash for Apple.
They haven't updated the return of capital yet.
I'm seeing it on one of the reports that just came out. 100. There, Bloomberg was reporting it.
Did they say what they did on buybacks this quarter?
If they put out the press release, let me check. I don't have it yet. Amazon did we hit 250 yet? No, we're still trying to hit it. Didn't hit it yet.
Yeah, and Amazon right now is a thing of beauty. Sam, how happy are you?
I'm ecstatic.
We can see it all over your face.
I can't. I'm not even doing anything right now. Just in my head, I'm like just celebrating. Like it's.
Bro, what percentage of your port is Amazon?
I don't know. I have to calculate right now, but I think it was like 16%.
Wow.
Today. So
Nice.
it's going to be a great day. But also, if you look at all the data center stocks out there, like Nebius is at $127 after hours, Iron's at almost 60. Like, this is great news for the data center companies too. So this is lifting all ships for me, all ships. I was actually telling people, like, I was like, look, if Amazon misses this quarter, I'm going to crawl into a hole tomorrow. Like, I'm not going to be alive.
Well, to be honest, if they missed, I thought it would go below 200, and I'd be like, that's a buying opportunity. Like,
yeah, that would have been good. Yeah.
I think most of us have such conviction on this story that I think a lot of us would have salivated for an under 200 dip, but they delivered.
I would be very surprised if they went under 200, considering the market's at all-time highs. Like that would be insane if that happened.
Did
someone said
just
grab
say,
news.
did someone just say Apple's dumping and it's down from 280 to 278? We are so spoiled, bro. We are so spoiled. Apple is not dumping. I wouldn't say that's a dump. You guys are saying there's grab news. I don't see any grab headlines. So if you have any, put it in the chat. But I don't see any grab headlines. But Monday we will have grab earnings as well. Okay, so we got 10 minutes until the call. Apple, I mean, I didn't expect 280. I'll say that. I really did not expect 280. But there you go. That one's going green. We do have a headline from OpenAI and Oracle. This is why the data centers are pumping, Sam. OpenAI, Oracle, and Related Digital announced Stargate data center in Michigan. There you go.
There's new stuff every day.
There you go. That's what's helping your Nebius and your CoreWeave. More and more data center sites continuing to expand. Apple 281, Amazon 249, Rocket's up 3, Western Digital, that's up 10.3. That one's doing well. And then Cloudflare, that's still up 5. MicroStrategy at 260. Meta's moving. Are we at 680 on Meta? Okay, it's up from 662. It's not moving crazy, but 672 is nice to see this after hours as well.
Meta like completely rejected the 200-day moving average when it bounced. Like I thought that was it, but anyways, not a big
Meta
deal.
is too strong of a company. I mean, this is the biggest. Can I curse on this, Amit?
Yeah, you're good.
This was the biggest bullshit move down. Like the biggest one. This was worse than last quarter when I flipped out about Amazon going down off of AWS. And here's where I get really pissed off about this. Everybody sold Meta off on the headline numbers in a millisecond without actually hearing the earnings call or reading through the report. The cash flow statement showed a thing of beauty. It was a one-time tax charge of $16 billion non-cash. And the CFO, Susan Lee, actually said on the earnings call, this is going to help them in Q4 and for years to come. So it was the biggest bullshit move down.
Yeah, I agree with you. I don't understand why the street's punching Meta for all this, but nonetheless,
Meta was because they missed on EPS by $5.50 instead of reading a cash flow statement and showing that even though CapEx increased by $3 billion, cash from operations and free cash flow increased by $1 billion. So,
agreed. And also, I mean, Meta was up 35% year to date. I mean, the street probably wanted a reason to take it down, but every price target I saw this morning got an upgrade. I mean, there were a couple of downgrades, but pretty much everyone has them at 1,100, 900 to 1,100. So I think we're gonna laugh at Meta in a year from now. I don't think Meta is gonna be stuck at 670. They're just again, these companies, their free cash flows, their net income, their margin, their ability to. I mean, there's 125 billion of demand for 25 billion of bonds that Meta offer today. Like 5x more the demand for corporate debt is incredible, and that means investors think there's not a lot of other places to put their cash in a safer way than into Meta that's investing it into data centers. So I think this dip gets bought.
I mean, think about it. If you want yield, are you not buying Meta bonds?
Agreed. And are you really afraid?
I mean, what's more secure than that?
Subscribe.
Yeah, for the rate of return you're going to get. I mean, obviously a money market fund is safer, but the rate of return on those Meta bonds is not as unsafe. By the way, speaking of money market funds, record high, 7.42 trillion. Last week, they increased by another 20.6 billion. 20.6 billion. Apple 284. Oh my. Oh my, back to Dan Ives here, but goodness gracious, 284 on Apple. Wow.
Came in strong, particularly for the cloud business. Apple moving well into positive territory as well, now up 4.5% after it was initially down 3. Strength overall for big tech, the way these two have performed, or was the bar just so low that, hey, they did okay?
I think it shows the big tech, if you look demand, it's spreading. I mean, for Apple, the China story, especially in terms of what the forecast, that's extremely bullish in terms of that China piece. And then you look at the Amazon, they're on the outside looking in relative to what Redmond's doing, what Google's doing, hyperscale. And look at those AWS numbers. I mean, that shows anyone that had doubts in terms of AI, is it a bubble? Look at the spending. Look at that CapEx. And
this is enough to erase the doubt. I mean, it's 20%, not to, look down the nose at 20%, but some of the smaller players have been up more than that. 20% is enough at AWS's scale to answer doubters?
Well, it's my view, like, Jassy's an AWS guy, and I think everyone counted them out. I think this is them showing, hey, don't count us out. You look at demand, you have trillions that's going to be spent over the coming years. They do have the biggest, when you look at AWS from a customer base perspective, and then you actually start to look at what Microsoft, what Google, what we're seeing across the board. This shows that AI revolution theme, it's spreading. Mm-hmm. Yeah, and I think what that's going to mean, authentication, that's going to mean cybersecurity, that's going to mean the use cases. And I think as a tech bull, you go into this weekend more bullish on AI rather than less bullish relative to these tech earnings, despite Meta selling off, which I view as a table bounder.
Bit of a détente between Trump and Xi, the U.S. and China today. What does that mean for Apple?
I mean, to me, like, look, Cook's on the right side of it, right? I mean, playing nice in the sandbox, in the Beltway. I think that's very bullish relative to any worries about supply chain issues relative to Apple in China, some of the stuff they're doing from an India perspective. Look, comes down to Cook, 10% politician, 90% CEO. And you start to think about what's happening on the China story. That, to me, is a green light, because now the runway's there, rare earthing kicked down, you have the trade framework out there. It's very strong for big tech, strong for names like Apple with the exposure to China, names like Tesla as well. And I think that's the overall theme here, is that now you're starting to see Amazon, Apple get into it. And I think second, third, fourth derivative is starting to play out. It's my view that's why this tech bull market, 2-3 more years left relative to this AI revolution trade.
It is not 96, it's 89. It's 89, Dan.
I was just about to say, so Dan says 2-3 years, Steve says 10 years left.
It's 89. We haven't even got a happy hour at 4 p.m. yet.
Well, we're going to see. We're going to see if that officially ends up playing out right here. So Apple and Amazon still moving. Apple 283.64, and Amazon's didn't hit 250 yet, but trying to get there. Apple 283.54. Yeah, we got
waiting for it. I want my screenshot.
Yeah, by the way, guys, that wasn't Steve's audio. That was there. I don't know why there's been so many police around today, but that was me. I forgot to mute, and you guys can hear all the police outside.
Wait, Bobo's coming after you?
No, it's raining heavy, so I think there's probably a bunch of accidents, and like I saw some cars that were legit like almost underwater as there was like some pretty heavy rain.
I can't believe how much it was raining today.
Yeah, that's what I'm saying. It was pretty aggressive. And that's why you're seeing it.
That's Amazon making it rain. Sorry, I had to do it.
There you go. All right, Amazon 248. We got the call in 2 minutes. I guess last thing before the call, and then we'll keep updating in the chat for whatever else happens throughout the day. Sam, what are you expecting Jassy to say? Do you think he needs to say anything specific?
I think he's probably going to start talking about AI growth in terms of their AWS products, and also I don't believe I think they give CapEx guidance on the call, so that's going to be important. I I want to hear if maybe there's a deal with one of these mining companies or one of the neo clouds.
You think
That would
they
be pretty
actually?
interesting to hear.
You think they announced a deal like that?
They never announced like a specific deal with anyone, but like 3 gigawatt capacity growth is pretty extreme. Are you guys doing your own? Like, I don't know who's helping you. Like, that's what I want to know. But I feel like something's gonna happen at some point when it comes to that sort of. Amazon is like one of the few companies that mega caps that never really announced a particular partnership with one of these miners. So we'll see, man. We will see. That would be crazy if they announce IRA. That would be insane. We'll see. I don't know. I don't want to get my hopes up, but you never know. You never know.
Okay, Steve, anything you think Jassy has to say on this call?
I don't know. I think a big thing is just going to be data centers, what they do with advertising, and robotics. I think that's going to be really what I want to say. So we'll see. And I hope, look, for Sam, I hope they announce something with Iran.
Yeah, no, that'd be dope. Actually, you mentioned robotics. I'm sure they're going to talk about that one. If he gives positive commentary in terms of efficiency, in addressing like the layoffs that they had with like replacing them with possible robots, or they're already deploying them. But like if they start talking about that, then that could be pretty interesting for some of the robotic plays. Actually, Stock Talk is in GXO. That one isn't directly partnered with Amazon, but that is a warehouse company that basically builds robots or uses robots in terms of their warehouse pipeline. So I don't know. This is also bullish for that stock too. So that this is it's a pretty interesting game to be in. Dude, Iron's back above $60 right now. It's insane.
I mean,
These
I
stocks are
hope
wild.
I hope they say a Nebius or an IRA. I mean, dude, people would go crazy.
That would be insane. I have a little bit of cover calls as part of my position, so I'm kind of secretly hoping they don't do that, but we'll see. Whatever, it is what it is.
All right, Amazon call. Let's get into it. I'll be in the chat if we get any other updates. We'll keep an eye on Apple, but let's get into Amazon.
Hello, and welcome to our Q3 2025 financial results conference call. Joining us today to answer your questions is Andy Jassy, our CEO, and Brian Olsavsky, our CFO. As you listen to today's conference call, we encourage you to have a press release in front of you, which includes our financial results, as well as metrics and commentary on the quarter. Please note, unless otherwise stated, all comparisons in this call will be against our results for the comparable period of 2024. Our comments and responses to your questions reflect management's views as of today, October 30th, 2025 only, and will include forward-looking statements. Actual results may differ materially. Additional information about factors that could potentially impact our financial results is included in today's press release and our filings with the SEC, including our most recent annual report on Form 10-K and subsequent filings. During this call, we may discuss certain non-GAAP financial measures. In our press release, slides accompanying this webcast, and our filings with the SEC, each of which is posted on our IR website, you will find additional disclosures regarding these non-GAAP measures, including reconciliations of these measures with comparable GAAP measures. Our guidance incorporates the order trends that we've seen to date and what we believe today to be appropriate assumptions. Our results are inherently unpredictable and may be materially affected by many factors, including fluctuations in foreign exchange rates, changes in global economic and geopolitical conditions, tariff and trade policies, and customer demand and spending, including the impact of recessionary fears, inflation, interest rates, regional labor market constraints, world events, the rate of growth of the internet, online commerce, cloud services, and new and emerging technologies, and the various factors detailed in our filings with the SEC. Our guidance assumes, among other things, that we don't conclude any additional business acquisitions, restructurings, or legal settlements. It's not possible to accurately predict demand for our goods and services, and therefore our actual results could differ materially from our guidance. And now I'll turn the call over to Andy.
Thanks, Dave. We saw strong growth across our business in Q3, and we're reporting $180.2 billion in revenue, up 12% year over year, excluding the impact from foreign exchange rates. Operating income was $17.4 billion, but would have been over $21 billion if not for two special Q3 expenses: $2.5 billion for an FTC settlement and $1.8 billion for estimated severance costs. Trailing 12-month free cash flow was $14.8 billion. I'll start with AWS. AWS is growing at a pace we haven't seen since 2022, re-accelerating to 20.2% year over year, our largest growth rate in 11 quarters. It's worth remembering that year-over-year percentage growth is a relative term. It's very different having 20% year-over-year growth on a $132 billion annualized run rate than to have a higher percentage growth rate on a meaningfully smaller annual revenue, which is the case with our competitors. Backlog grew to $200 billion by Q3 quarter end and doesn't include several unannounced new deals in October, which together are more than our total deal volume for all of Q3. AWS is gaining momentum. Customers want to be running their core and AI workloads in AWS, given its stronger functionality. Security, and operational performance. And the scale I see in front of us gives me significant confidence in what lies ahead. I'll share a little more detail on why. It starts with AWS having much broader infrastructure functionality. Startups, enterprises, and governments want to move their production workloads to the place that has the broadest and deepest array of capabilities. AWS has more services and deeper features within those services than anybody else and continues to innovate at a rapid clip. These are key building blocks for anything that customers want to create, and they're a big part of why Gartner has named AWS leader in its Strategic Cloud Platform Services Magic Quadrant for 15 consecutive years. We're bringing the same building block approach to AI. SageMaker makes it much simpler for companies to build and deploy their own foundation models. Bedrock gives customers leading selection of foundation models and superior price performance to deploy inference into their next generation applications. A lot of the future value companies will get from AI will be in the form of agents. AWS is heavily investing in this area and well positioned to be a leader. Companies will both create their own agents and use agents from other companies. For those building their own, it's been harder to build than it should be. It's why we launched Strands, to make it much easier to create agents from any foundation model that builders desire. For companies who successfully built agents, they've hesitated putting them into production because they've lacked secure, scalable runtime services or memory or observability built specifically for agents. It's why we launched Agent Core, a set of infrastructure building blocks that allow builders to deploy secure, scalable agents. Ericsson used Agent Core to deliver AI agents across their workforce. Sony used it to build an agentic AI platform with enterprise-level security, observability, and scalability. And Cohere Health is using Agent Core to deploy agents that will reduce medical review times by up to 30 to 40%. Agent Core's SDK has already been downloaded over 1 million times, and our builders are excited about it. It's an enabler. Companies will also use others' agents, and AWS continues to build many of the agents we believe builders will use in the future. For coding, we've recently opened up our agentic coding IDE called Kiro. More than 100,000 developers jumped into Kiro in just the first few days of preview, and that number has more than doubled since. It's processed trillions of tokens thus far, weekly actives are growing fast, and developers love its unique spec and tool calling capabilities. For migration and transformation, we offer an agent called Transform. Year to date, customers have already used it to save 700,000 hours of manual effort, the equivalent of 335 developer years of work. For example, Thomson Reuters used it to transform 1.5 million lines of code per month, moving from Windows to open source alternatives and completing tasks 4 times faster than with other migration tools. Customers have also already used Transform to analyze nearly 1 billion lines of mainframe code as they move mainframe applications to the cloud. For business customers, we've recently launched Quick Suite to bring a consumer AI-like experience to work, making it easy to find insights, conduct deep research, automate tasks, visualize data, and take actions. We've already seen users turn months-long projects into days, get 80% plus time savings on complex tasks, and realize 90% plus cost savings. And for contact centers, we offer Amazon Connect, which creates a more personalized and efficient experience for contact center agents, managers, and their customers. Connect has recently crested $1 billion annualized revenue run rate, with 12 billion minutes of customer interactions being handled by AI in the last year, and is being used by large enterprises like Capital One, Toyota, American Airlines, and Ryanair. These are real practical results for customers, and there are many more examples like them. Because of its advanced capabilities, security, operational performance, and customer focus, AWS continues to earn most of the big enterprise and government transformations to the cloud. As a result, AWS is where the preponderance of companies' data and workloads reside, and part of why most companies want to run AI in AWS. To enable customers to do so, we need to have the requisite capacity, and we've been focused on accelerating capacity the last several months, adding more than 3.8 gigawatts of power in the past 12 months, more than any other cloud provider. To put that into perspective, we're now double the power capacity that AWS was in 2022, and we're on track to double again by 2027. In the last quarter of this year alone, we expect to add at least another 1 gigawatt of power. This capacity consists of power, data center, and chips, primarily our custom silicon Trainium and NVIDIA. We've recently brought Project Rainier online, our massive AI compute cluster spanning multiple U.S. data centers and containing nearly 500,000 of our Trainium 2 chips. Anthropic is using it now to build and deploy its industry-leading AI model, Claude, which we expect to be on more than 1 million Trainium 2 chips by year-end. Trainium 2 continues to see strong adoption, is fully subscribed, and is now a multi-billion-dollar business that grew 150% quarter over quarter. Today, Trainium is being used by a small number of very large customers, but we expect to accommodate more customers starting with Trainium 3. We're building Bedrock to be the biggest inference engine in the world, and in the long run, believe Bedrock could be as big a business for AWS as EC2. And the majority of token usage in Amazon Bedrock is already running on Trainium. We're also continuing to work closely with chip partners like NVIDIA, with whom we continue to order very significant amounts, as well as with AMD and Intel. These are very important partners with whom we expect to keep growing our relationships over time. You're going to see us continue to be very aggressive investing in capacity because we see the demand. As fast as we're adding capacity right now, we're monetizing it. It's still quite early and represents an unusual opportunity for customers in AWS. I'll now turn to stores, where the team continues to deliver and innovate for customers across our key priorities: selection, low prices, and convenience, particularly fast delivery. We're offering 14% more selection since last quarter from popular brands like The North Face and Charlotte Tilbury, and we've added hundreds of thousands of items from popular brands this year. Everyday Essentials continues to grow quickly, and year-to-date is growing nearly twice as fast as the rest of the business. We continue to make it easier for customers to order low-priced perishable groceries from Amazon, and customers in more than 1,000 cities and towns now can shop fresh groceries alongside millions of Amazon.com products with free same-day delivery. This is a game changer for customers who can now order milk alongside electronics, check out with one cart, and have everything delivered to their doorstep within hours. The team also invented a new Add to Delivery button that lets customers add items to previously scheduled orders, and it's been used more than 80 million times since launch, and it just launched. It's an example of one of those seemingly simple but powerful innovations that make customers' lives easier. We remain committed to staying sharp on price and meeting or beating prices of other major retailers. In July, we had our biggest Prime Day event ever, with customers saving billions of dollars across more than 35 categories. We continue to break records on speed. We're on track to deliver at our fastest speeds ever for Prime members globally once again this year, and we've started rolling out 3-hour delivery in select U.S. cities. We're also continuing to invest in infrastructure to speed up rural deliveries and serve more customers in more communities. That includes committing over $4 billion to expand our rural delivery network across the U.S. These are small towns where people want fast delivery, but where other companies have been backing out and reducing service. In contrast, we've already increased the number of rural communities with access to our same-day and next-day delivery by 60%, reaching roughly half of the total communities we plan to expand to by the end of the year. The stores team is also innovating rapidly with AI. For example, Rufus, our AI-powered shopping assistant, has had 250 million active customers this year, with monthly users up 140% year over year, interactions up 210% year over year, and customers using Rufus during a shopping trip being 60% more likely to complete a purchase. Rufus is on track to deliver over $10 billion in incremental annualized sales. Here are the highlights. Our generative AI-powered audio feature that combines product summaries and reviews to make shopping easier has expanded from hundreds of products at launch to millions of products, and millions of customers have used it, streaming almost 3 million minutes. And Amazon Lens, an AI-powered visual search tool that lets customers find products with their phone's camera, a screenshot, or a barcode, now includes Lens Live, which instantly scans products and shows real-time matches in a swipeable carousel. Tens of millions of customers are using Amazon Lens each month. Moving on to Amazon Ads, we're pleased with the continued strong growth, generating $17.6 billion of revenue in the quarter and growing 22% year over year. We see strength across our broad portfolio of full funnel advertising offerings that helps advertisers reach an average ad-supported audience of more than 300 million in the US alone. We also continue to be excited about our demand-side platform, Amazon DSP, which lets advertisers plan, activate, and measure full funnel investments. Last quarter, I mentioned our partnership with Roku, and we've built on that with a partnership with Netflix, providing advertisers using Amazon DSP with direct access to Netflix's premium ad inventory. We announced integrations with Spotify and SiriusXM. With Spotify, we provide advertisers with direct programmatic access to a global audience of more than 400 million monthly ad-supported listeners. And with SiriusXM, brands can reach 160 million monthly digital listeners across services like Pandora and SoundCloud. And we're excited about the advertising opportunity around Prime Video Live Sports. Live Sports got a lot of interest from advertisers in upfront negotiations for 2025-26, and we exceeded our own expectations for upfront commitments with significant growth across the board. Finally, we're continuing to innovate for advertisers with AI. For example, in September, we announced an agentic AI tool in Creative Studio that plans and executes the entire creative process in a matter of hours instead of weeks. We're also inventing and seeing strong momentum in several other areas, and I'll mention just a few. In Prime Video Live Sports, NBA on Prime tipped off last week, and our opening night doubleheader averaged 1.25 million viewers in the US, a double-digit increase over last season on cable. You'll see us bring the same constant innovation here that we brought to our NFL broadcasts. We're adding golf with the Masters in 2026 and a new skins competition with the PGA Tour on Black Friday this year. And we've added Peacock and Fox One to Prime Video's add-on subscription offering of over 100 channels in the US. We continue to be energized by the response to Alexa Plus. Compared to what we call the classic Alexa experience, Alexa Plus customers are talking to Alexa 2 times more. Those interactions are much longer, and they're covering a broader range of topics. They're using Alexa Plus on Fire TV at 2.5 times the rate of Classic, using natural conversation to discover audio content 4 times more, engaging with photos 4 times more, and customers are completing 4 times more shopping conversations that end in a purchase. We've expanded the number of Project Kuiper satellites in space to more than 150 and delivered over 1 gigabit per second speeds in tests with our enterprise-grade customer terminal, the first commercial phased array we know of to clear that threshold. Finally, Zoox robotaxis are available to riders in Las Vegas, and we've announced Washington, D.C. as the 8th testing location. We're excited for these to continue rolling out to more riders. Q4 is one of our busiest and most energizing times of the year, and we're excited about the continued demand for AWS, the innovations we'll announce at reInvent in December, the positive customer response to our AI-powered experiences, all the gifts we'll be delivering throughout the holiday season, and a lot more. Thanks in advance to our teammates around the world who are gearing up to deliver for customers once again. With that, I'll turn it over to Brian for a financial update.
255, baby!
Starting with our top-line financial results. Worldwide revenue was $180.2 billion, a 12% increase year over year, excluding a 90 basis point favorable impact of foreign exchange. In Q3, we reported worldwide operating income of $17.4 billion. This operating income includes 2 special charges, which reduced operating income by $4.3 billion. The first charge of $2.5 billion is related to a legal settlement with the Federal Trade Commission, which impacts the North America segment and is recorded in the other operating expense line. The second charge of $1.8 billion relates to severance costs for role eliminations and impacts all three of our segments. The severance charge is recorded primarily in the technology and infrastructure, sales and marketing, and general and administrative expense line items. Excluding these two charges, worldwide operating income would have been $21.7 billion, or $1.2 billion above the high end of our guidance range. Moving to our segment results. We remain encouraged by the innovation our teams are delivering for customers across all three segments. In the North America segment, third quarter revenue was $106.3 billion, an increase of 11% year over year. International segment revenue was $40.9 billion, an increase of 10% year over year, excluding the impact of foreign exchange. Worldwide paid units grew 11% year over year. We continue to prioritize the inputs that matter most to our customers. In the third quarter, our sharp pricing, broad selection, and fast delivery speeds continue to resonate with customers. Customers appreciate the ability to quickly receive items essential for their daily needs, including perishable groceries, and have them delivered in the same day. Our millions of global third-party sellers continue to be important contributors to our vast selection, which helps customers find the items they need at competitive prices. We're committed to building innovative services and features for our sellers, including our ongoing advancements in generative AI. Today, more than 1.3 million sellers have used our generative AI capabilities to more quickly launch high-quality listings. Better listings translate into better traction with customers, and in Q3, worldwide third-party seller unit mix was 62%, up 200 basis points from Q3 of last year. Shifting to profitability, North America segment operating income was $4.8 billion, with an operating margin of 4.5%. Excluding the $2.5 billion charge related to the legal settlement with the FTC, North America segment operating income would have been $7.3 billion, with an operating margin of 6.9%. North America segment operating margin also includes a portion of the severance charge. International segment operating income was $1.2 billion, with an operating margin of 2.9%. Excluding the impact of the severance charge, international segment operating margins expanded year over year. Globally, our progress on key inputs is delivering a better customer experience while driving a more efficient cost structure. For example, we're making notable strides in improving inventory placement to speed up delivery to customers. And as a result, for the third year in a row, we are on track to deliver our fastest speeds ever for Prime members in 2025. We continue to tune and improve our fulfillment operations, and our regionalized network is operating at scale. We see many benefits from our inbound process improvements, including a reduction of U.S. inbound lead time by nearly 4 days compared to last year. This allows us to be more efficient with our inventory purchasing, which benefits working capital. We're also placing inventory more strategically throughout the network. And by leveraging our existing infrastructure, we're now offering U.S. customers the ability to order perishable groceries and receive them the same day in as little as 5 hours. We're seeing positive early results. Since launching in January, when customers start shopping fresh groceries on Amazon, they are visiting the site more often and returning twice as often as non-perishable shoppers. Looking ahead, we see further opportunity to improve productivity in our global fulfillment and transportation network. We will continue to improve inventory placement to drive down distance traveled and touches per package. We will also build on the gains from our regionalized network through algorithmic improvements, as well as launching robotics and automation. While operating margin may fluctuate quarter to quarter, we have a deliberate approach to achieve sustained progress over the long term. Shifting to advertising. Advertising revenue was $17.7 billion, and growth accelerated for the third consecutive quarter. We continue to see strong growth on an increasingly large base as our full funnel advertising approach of connecting brands with customers is resonating. Moving next to our AWS segment, revenue was $33 billion, up 20.2% year over year. This is an acceleration of 270 basis points compared to last quarter, driven by strong growth across both our AI and core services and more capacity which has come online to support customer demand. AWS revenue increased $2.1 billion quarter over quarter and now has an annualized revenue run rate of $132 billion. AWS operating income was $11.4 billion and reflects our continued growth coupled with our focus on driving efficiencies across the business. We are expanding our data center footprint largely to accommodate Gen AI, and to the extent those assets were placed into service, the related depreciation does impact our margins. As we've long said, we expect AWS operating margins to fluctuate over time, driven in part by the level of investments we're making at any point in time. Now turning to our cash CapEx, which was $34.2 billion in Q3. We've now spent $89.9 billion so far this year. This primarily relates to AWS as we invest to support demand for AI and core services and in custom silicon like Trainium, as well as tech infrastructure to support our North America and international segments. We'll continue to make significant investments, especially in AI, as we believe it to be a massive opportunity with the potential for strong returns on invested capital over the long term. Additionally, we continue to invest in our fulfillment and transportation network to support the growth of the business, improve delivery speeds, and lower our cost to serve. These investments will support growth for many years to come. Looking ahead, we expect our full-year cash CapEx to be approximately $125 billion in 2025, and we expect that amount will increase in 2026. I'll finish up my remarks with net income. While we primarily focus our comments on operating income, our third quarter net income of $21.2 billion includes a pre-tax gain of $9.5 billion related to our investment in Anthropic. This investment activity is not related to Amazon's ongoing operations and is included in non-operating income. We're encouraged by the start of the peak season, and we are ready to serve customers in the coming months. I want to thank our teams across Amazon for their hard work as we get ready to delight customers during the holiday season. Our commitment to elevating the customer experience is the only reliable way to drive sustainable value for our shareholders. With that, let's move on to your questions.
Thank you. At this time, we will now open the call up for questions. We ask each caller to please limit yourself to one question. If you would like to ask a question.
All right, Q&A, 253 on the stock. Q&A tends to move the stock. I mean, this is already a pretty big move, but we're going to see what questions we get for Amazon.
Question, please press star, then one on your touch-tone telephone at this time. Please hold while we poll for questions. And our first question comes from the line of Justin Post with Bank of America. Please proceed.
Great, thank you. I'll ask on AWS. Can you just kind of go through how you're feeling about your capacity levels and how capacity constrained you are right now? And then on your prepared remarks, you mentioned Trainium 3 demand and maybe broadening out your customer base. Can you talk about the demand you're seeing, outside of your major customers for Trainium? Thank you.
Yeah, on the capacity side, we brought in quite a bit of capacity, as I mentioned in my opening comments, 3.8 gigawatts of capacity in the last year, with another gigawatt plus coming in the fourth quarter, and we expect to double our overall capacity by the end of 2027. So we're bringing in quite a bit of capacity. Today, overall in the industry, maybe the bottleneck is power. I think at some point it may move to chips, but we're bringing in quite a bit of capacity, and as fast as we're bringing it in right now, we are monetizing it. And then on the Trainium demand outside of our major customers. So first of all, as I mentioned on Trainium 2, it's really doing well. It's fully subscribed on Trainium 2. We have, it's a multi-billion-dollar business at this point. It grew 150% quarter over quarter in revenue. And you see really big projects at scale now, like our project Rainier that we're doing with Anthropic, where they're running they're training the next version of Claude on top of Trainium 2 on 500,000 Trainium 2 chips, going to 1 million Trainium 2 chips by the end of the year.
As I mentioned, we have today with Trainium 2, we have a small number of very large customers on it. But because Trainium is 30 to 40% more price performant than other options out there, and because as customers, as they start to contemplate broader scale of their production workloads, moving to being AI focused and using inference, they badly care about price performance. And so we have a lot of demand for Trainium. Trainium 3 should preview at the end of this year with much fuller volumes coming in the beginning of 26. We have a lot of customers, both very large and I'll call it medium size, who are quite interested in Trainium 3.
And the next question comes from the line of Brian Nowak with Morgan Stanley.
Thanks for taking my questions. Congrats on the quarter, guys. So maybe two. One, Andy, sort of a philosophical chip question. You know, there's a lot of questions in the market about Trainium and sort of its positioning versus other third-party chips. So how do you think about the key hurdles with Trainium 3 you need to overcome to really make Trainium adoption broader, to your point on the last question, and continue to drive Trainium, as opposed to satisfying what could be broader demand with third-party chips in the near term?
Yeah, well, first of all, we're always going to have multiple chip options for our customers. It's been true in every major technology building block or component that we've had in AWS. Really, in the history of AWS, it's never just one player that over a long period of time has the entire market segment and can satisfy everybody's needs on every dimension. And so we have a very deep relationship with NVIDIA. We have for a very long time, and we will for as long as I can foresee the future. We buy a lot of NVIDIA. We are not constrained in any way in buying NVIDIA, and I expect that we'll continue to buy more NVIDIA both next year and in the future. But we're different from most technology companies in that we have our own very strong chip team, and this is our Annapurna team. And you saw it first on the CPU side with what we built with Graviton, which is about 40% better price performance than the other x86 processors. And you're seeing it again on the custom silicon on the AI side with Trainium, which is about the same amount of price performance benefit for customers relative to other GPU options. And our customers, to be able to use AI as expansively as they want, and remember, it's still relatively early days at this point, they're going to need better price performance, and they care about it deeply. And so, I mentioned earlier the momentum that Trainium 2 has, and I think that for us, as we think about Trainium 3, I expect Trainium 3 will be about 40% better than Trainium 2, and Trainium 2 is already very advantaged on price performance. So we have to, of course, deliver the chip. We have to deliver it in volumes and deliver it quickly. And we have to, continue to work on the software ecosystem, which gets better all the time. And as we have more proof points, like we have with Project Rainier, with what Anthropic is doing on Trainium 2, it builds increasing credibility for Trainium. And I think customers are very bullish about it. And I'm bullish about it as well.
Guys, Amazon CapEx guide is 125.
And our next question comes from the line of
125 billion for next year. That's what the CFO just said.
Question.
Thanks for taking the question. I'll stick with basically the same topic, Andy. But can you just talk a little bit about the architecture of Project Rainier and how it's differentiated, and what that means for customers and for AWS? And do you expect Rainier to expand beyond Anthropic? And how do you replicate Rainier with Trainium 3 chips? Thanks.
Yeah, I think what is compelling for Anthropic around Project Rainier is, really is the Trainium 2 chip, which, we've built first of all, we built a very large cluster that they can use in a very expansive way. And it's not simple to be able to build a cluster that has 500,000 plus chips going to 1 million. That's an infrastructure feat that's hard to do at scale. And so, some piece of it is the infrastructure capabilities that we've built over a long period of time in AWS that is, unusual in the industry. But it's just also the performance of the chip and the price performance, which both of which matter. And I think that Project Rainier is something that is specific for Anthropic, but we have a lot of other customers who are interested in employing large clusters of Trainium chips that we're going to hopefully give them a chance to do so with Trainium 3.
And the next question comes from the line of Mark Mahaney with Evercore ISI. Please proceed with your question.
Thanks. I want to ask about two topics, groceries and then how to think about headcount in the future. And on groceries, the perishables, I think last quarter you talked about 70% or something of users had never purchased from perishables from Amazon before. Just talk about whether I think you used the term game changer before. Does this mean that maybe you no longer need to do Amazon Fresh stores? You always had this DVD delivery van density advantage. And have you kind of reached a point, you think, of scale and speed that you really can change people's habit and really have them consider Amazon as one of their first grocery options? Do you really feel like you're at that point? And then secondly, just on the headcount, given some of the recent news, just talk to us about how you think about headcount going forward. Are you seeing is the level of efficiencies that you're getting from AI such that you can keep headcount relatively flattish for the foreseeable future? Just talk about the pros and cons or the wins and losses in terms of that headcount going forwards. Thank you.
Yeah, so I'll start with grocery, Mark. We have a very large grocery business. If you look at our entire grocery business, if I don't even count Whole Foods Market and Fresh, in the last 12 months, it's over $100 billion of gross merchandising sales, which would make us a top 3 grocery in the U.S. A good chunk of it is a lot of the items that you'd find in the middle aisles, so consumables and canned goods and pet food and health and beauty, very significant, that continues to grow at a very good clip. But then, we also have Whole Foods Market, which is the pioneer in organic foods, which is also growing at a faster clip than most grocery companies and with an attractive trajectory on profitability. And we'll expand our Whole Foods physical presence over the coming years here. And I'm also very excited about this new concept, Daily Shop, that we have, which is a smaller version of Whole Foods in urban settings, which we have 3 that we've launched that are off to very good starts that you should expect to see more of as well. Now, we have always been, as you referenced, we've talked a lot about having a larger mass physical presence. And we continue to experiment with various formats. But the one that we are most excited about is what you referenced, which is the ability to provide perishable groceries with same-day deliveries. And if you think about how many of our customers are buying from us multiple times a week and who are buying things like shampoo or detergent or paper cups or water, where the ability to add milk and eggs and yogurt and other perishables to their order and have it live in the same shopping cart and then show up a few hours later is very compelling. And we started with a few markets about a year ago, and we were really taken aback at the adoption, not just the number of people that started buying perishables from us very quickly, but how often they came back downstream to buy perishables and groceries from us in the future. And so we've now expanded that to 1,000 cities around the U.S. We'll be in 2,300 by the end of the year. And it's really changing the trajectory and the size of our grocery business. And I also believe that this many years tradition of the weekly stock up, grocery stock up is changing. And I think we're a big part of that. And I think there's a lot of potential there for the grocery side. It doesn't mean that we won't continue to experiment with other physical formats, but we're on to something very significant with what we're doing with perishables from our same-day facilities. And then on your headcount question, what I would tell you is, the announcement that we made a few days ago was not really financially driven, and it's not even really AI driven. Not right now, at least. It's culture. And if you grow
as fast as we did for several years, the size of businesses, the number of people, the number of locations, the types of businesses you're in, you end up with a lot more people than what you had before, and you end up with a lot more layers. And when that happens, sometimes without realizing it, you can weaken the ownership of the people that you have who are doing the actual work and who own most of the two-way door decisions, the ones that should be made quickly and right at the front line, and it can lead to slowing you down. And as a leadership team, we are committed to operating like the world's largest startup, and that means removing layers, it means increasing the amount of ownership that people have, and it means inventing and moving quickly. And I don't know if there's ever been a time in the history of Amazon or maybe business in general with the technology transformation happening right now, where it's important to be lean, it's important to be flat, and it's important to move fast. And that's what we're going to do.
And the next question comes from the line of Eric Sheridan with Goldman Sachs. Please proceed with your question.
Thanks so much for taking the question. Wanted to know, Andy, if you could reflect on the opportunity that's continuing to present itself in terms of rolling out more robotics and automation and the broader theme of physical AI across your operations, and how you should be thinking about that as a driver of potential efficiencies, but also as a driver of the ability to possibly reinvest back in the business over the long term. Thanks so much.
Robotics is a very substantial area of investment for us. We have over 1 million robots in our fulfillment network at this point. And I would say that while that's significant, we have a lot of invention in flight. So I expect that we'll have more over a period of time. Robotics are very important for us and for our customers and for our teammates because they improve safety, they boost productivity, they increase speed, and they let our human teammates focus on problem solving and what they do best. And we expect that our people will remain at the heart and the center of our fulfillment network, as they have from when we first started working on robotics. And we expect that over time we will have a fulfillment network where robots and humans complement each other and work together. But I think you're going to continue to see us invest very significantly in robotics. It's going to help on the safety, the productivity, the speed, and ultimately some of the cost pieces, which will allow us to continue to improve the customer experience.
And the next question comes from the line of John Blackledge with TD Cowen. Please proceed with your question.
Great. Thank you. How does Amazon think about agentic commerce going forward, and how do you think Amazon will serve customers using agents to purchase goods on Amazon in the future? Thank you.
I'm very excited about, and as a business, we're very excited about in the long term, the prospect of agentic commerce. And it has a chance to be good for customers. It has a chance to be really good for e-commerce. And, I think if you know what you want to buy, there are a few experiences that are better than coming to Amazon. But if you don't know what you want, it's, a physical store with a physical salesperson still has some advantages. Obviously, lots of people do it on Amazon all the time, but you very often want to ask questions and get help narrowing what you're going to look for. And as you keep asking new questions, having a whole bunch of different options presented to you. And I think AI and agentic commerce are going to change the experience online, where that experience where you're narrowing what you want when you don't know is going to get better online than it even is in physical environments. Now, we obviously have our own efforts here in agentic commerce. We have Rufus, which I talked about in my opening comments, which is continuing to get better and better and used more broadly. And we have features like Buy For Me, where we will surface on Amazon even items that we don't stock that other merchants have. And then if customers want us to go and buy it for them on those merchants' websites, we will do that. And both of those have been successful for us. But we're also, having conversations with and expect over time to partner with third-party agents. And, I think that it reminds me in some ways of the beginning of search engines many years ago being sources of discovery for commerce. And you had to kind of figure out the right way to work together. And today, search engines are a very small part of our referral traffic, and third-party agents are a very small subset of that. But I do think that we will find ways to partner. We have to find a way, though, that makes the customer experience good. Right now, I would say the customer experience is not good. There's no personalization. There's no shopping history. The delivery estimates are frequently wrong. The prices are often wrong. So we've got to find a way to make the customer experience better and have the right exchange of value. But I do think that the exciting part of this and the promise is that AI and agentic commerce solutions are going to expand the amount of shopping that happens online. And I think that's really good for customers, and I think it's really good for Amazon, because at the end of the day, you're going to buy from the outfit that allows you to have the broadest selection, great value, and continues to deliver for you very quickly and reliably. And I think that bodes well for us.
And our final question comes from the line of Colin Sebastian with Baird. Please proceed with your question.
Thanks. Good afternoon. I guess first on AWS, following up there, how much of this acceleration is driven by core infrastructure versus AI workload monetization? And I think part of it is trying to understand how important newer services like Agent Core are becoming in bringing enterprises to AWS to build agents. And then I guess secondly, regarding the acceleration in advertising, if you could potentially disaggregate the core advertising contribution versus DSP and Prime Video, that would be helpful as well. Thank you.
Yeah, I'll start on the AWS side. We are seeing, we're really pleased with the results from this quarter. 20% year over year on a annualized run rate of $132 billion is unusual. And we have momentum, and you can see it. And we see the growth in both our AI area, where we see it in inference, we see it in training, we see it in the use of our Trainium custom silicon. Bedrock continues to grow really quickly. SageMaker continues to grow quickly. And I think that the number of companies who are working on building agents is very significant. I do believe that a lot of the value that companies will realize over time in AI will come from agents. And I think that building agents today is still harder than it should be. You need tools to make it easier, which is why we built Strands, which is an open source capability that lets people build agents from any model that they can imagine. But even more so, when you talk to enterprises or companies that care a lot about security and scale, they're starting to build agents, and they don't really feel like they've had building blocks that allow them to have the type of secure, scalable agents that they need to bet their businesses and their customer experiences and their data on. And that was really the inspiration behind Agent Core, was to build another set of primitive building blocks like we built in the early days of AWS, where it was compute and storage and database. We defined a set of building blocks that you needed to be able to deploy agents securely and scalably that we provide in Agent Core. And then when we talk to our customers, it really resonates. There is not anything else like it. It's changing their time frame and their receptivity to building agents. And it's very compelling for them. So I do think, the combination of what we're doing to enable agents to be built and run securely and scalably, as well as some of the agents that we're building ourselves that our customers are excited about, are compelling for them. And, I think the other place we see a lot of growth in AWS also, is just the number of enterprises who've gotten back to moving from on-premises infrastructure to the cloud. And we continue to earn the lion's share of those transformations. And, I look at the momentum we have right now, and I believe that we can continue to grow at a clip like this for a while. I think on the advertising side, That is also an area where I think collectively we feel very pleased about the progress. Every single one of our advertising offerings this quarter grew in a meaningful way. I think there's a few things going on for us. We have what I think of as a pretty unusual full funnel offering. And if you look at the top of the funnel, which typically tends to be awareness building and broad scale, to be able to use our own, Prime Video and our live sports capabilities, as well as going all the way down to the bottom of the funnel at point of sale, being able to use sponsored products. That's, most people don't have a full funnel offering as robust as that. And then when you layer on top of it, the combination of the audience curation and development we can do, along with the advantage measurement, it just all leads to a return on advertising spend that's very unusual. And I think there are multiple places where we can expect to continue to grow. One is in our stores business. I still think, if you look at the worldwide market segment share of retail, still 80 to 85% of it lives in physical stores. And that equation is going to flip over time. And I think AI is going to only accelerate that. So I think we have a significant opportunity still in our existing stores. And then I think video, we've only been at this for a little bit of time, but it's already a very large amount of advertising revenue, and we're still relatively early stage. I think that will continue to be a big area of growth. And then as you reference, the amount, their demand side platform, or Amazon DSP, that is growing really quickly as well. And some of it had to do with the fact that we had some features. We always had a number of the core components people wanted around some of our properties, the measurement capabilities, Amazon Marketing Cloud, but we lacked some features for a while as we were building out our DSP that customers told us mattered. And the team over the last 20 months have closed those gaps in a very significant way, so that now people feel like our DSP is fully featured. And then you look at some of the partnerships that we've done. The Roku partnership gives us the largest connected TV footprint in the US. And you layer on top of that what we've recently done in providing our DSP customers the opportunity to integrate with the ad inventory in Netflix and in Spotify and in SiriusXM. It's powerful. And so we are growing very quickly on the demand side platform. So very optimistic about what we're doing there. We've continued work to do, obviously, but I don't think we're close to being able to grow there.
Thanks for joining us on the call today and for your questions. A replay will be available on our investor relations website for at least 3 months. We appreciate your interest in Amazon and look forward to speaking with you again next quarter.
All right, folks. There we go. Holding the gains through the call. We got to 255. We are at 253. Sam, I'll give it to you. What are your thoughts on that call?
Straight up execution. OG Andy Jassy. I want all of those Amazon bears to shut your damn mouths, all right? I don't want to hear it anymore, all right? This is the same thing that happened with Google. You don't hear a single peep on Twitter anymore. I don't want to hear it with Amazon. And on top of that, that old CapEx argument with Meta is so dumb because you have had every single other mega cap increase their CapEx. And now that becomes an argument for Meta, man, get the hell out of here. That is just ridiculous. The street sold off Meta because next quarter's guide for revenue growth was not nearly as much as the previous quarter. But anyways, dude, it's a great day. It's a great day. So now let's hope that no one tweets tonight some crazy news and we don't go limit down overnight.
What were your thoughts on the Tranium stuff, which I felt like was the most bullish?
Good question. I actually have a Twitter thread where I was just writing up the commentary. So Tranium was actually pretty interesting because they were saying that that grew 150% quarter over quarter for Tranium 2, which is now a multi-billion-dollar business. And he was also saying that Tranium 3 is 40% faster than Tranium 2.
Yeah.
And he's also saying that these large clients, including Anthropic, are like ready to sign up and oversubscribe for Tranium 3. So they're going to release Tranium 3 in preview by the end of the year, and they're going to ramp up by next year. dude, this is bullish for ASICs. And he was also saying, like, this is also bullish for NVIDIA too. Like, it doesn't mean that NVIDIA is going to go downhill or anything. It's just the demand is so strong that people are looking for a specific type of compute for their own applications, right? So if you stack up TPUs versus NVIDIA GPUs, NVIDIA GPUs are general processing for graphical units, right? TPUs are designed specifically for searches for Google. So it's going to offer better performance and much higher margins. So when you think about Trainium, it depends on which company it is, but specifically for Anthropic, which is one of their largest customers, they're buying Trainium 2 and want to buy Trainium 3, and that's a much higher margin for Amazon, which is going to ultimately help their operating income. And the last thing too, I've been saying this since last week, Amazon laying off 14,000 to 30,000 workers is not because of AI. It's just efficiency, and Andy Jassy confirmed it. It's more of a cultural shift. He wants to downsize a little bit to kind of keep the ownership in there because, dude, they increased their workforce, and so did the entire country in 2020 and 2021. It all needs to normalize, right? So, dude, such a bullish call, man. I think, damn, what a fake out today. What a complete fake out.
I mean, fake out feels like an understatement. The meta PTSD, and then you see Amazon fall 3%. Everyone was feeling, all right, what are we getting ready to hear? And then completely opposite direction.
Someone said there, who makes Trainium 3? So they never actually confirmed that Marvell designs Trainium 3. That was like never confirmed anywhere. I expected to hear that on Marvell's AI Investor Day. What was it, last June? They didn't say anything about that. So Marvell helps design Trainium 2. Do they design Trainium 3? I think if no news is good news, so we're going to assume that they still are. But we'll see. I mean, Marvell has been on a crazy run lately. And also, when you think about these ASIC chips, dude, a lot of high bandwidth memory is used for that. Look at Micron, one of the largest high bandwidth memory providers in the entire world. They basically doubled in the last few months. And a lot of people were able to ride that ride, including myself, right? But every single thing in the fabrication pipeline for chips is going to continue riding because of all this, because of all this demand. And I think the biggest thing in this call that I heard was the fact that not only did they basically double or add 3.8 gigawatts of capacity in the last 12 months, but they expect to add another 1 gigawatts of capacity by the end of the year, so this quarter. And on top of that, they expect to double total capacity by 2027. Like, holy cow. That's insane. All right. They just added 3.8 gigawatts. They're going to add about 5 gigawatts just this year alone, and maybe have more than double that by 2027. And that number is going to be way more than 10 gigawatts. Like, I don't know. It's so hard to be bearish other than the fact that S&P is totally extended right now. But, from a long-term point of view, like, I don't know. I don't know what the bears want. I don't know what they want.
I would agree with you. I think this was one of those quarters that could be a narrative re-rating for Amazon. Real quick, just on Apple, they're assuming $1.1 billion in tariff costs next quarter. Company significantly increasing investments in AI, expects $1.4 billion in tariff-related impact in December, seeing gross margin between 47 and 48. Apple, very little decline from 284 to 279. The fact that it even got to 280 is incredible to see. But Apple looks like those tariff-related costs for the Q4 is why you're seeing a little bit of weakness right there. I did not expect Apple to get anywhere near 280, but a 10 to 12% revenue guide for Q4 is what gets the street excited on that one. In terms of Amazon, my takeaway from the call as well was that Jassy, his first statement on the press release and on the call was that we have not seen this type of demand for AWS since 2022. He was very obviously talking to all the people on Wall Street and the broader investing community that said AWS is hitting a wall and not able to grow. Every other cloud provider in terms of Microsoft and Google is above 20%, Google at 30%, Microsoft at 40% for Azure. So, Amazon stuck at 17.5, 18% just wasn't cutting it. Well, you got to 20%. And as a result, I think that kind of calmed down a lot of worries from the street. Advertising continues to do well. Their e-commerce business is not going anywhere. I mean, everything that you wanted to see from Amazon pretty much did what they had to do. Austin right here, who is a big fan of Amazon as well. I'm going to put his Twitter in the chat for anyone who wants to follow him. He's been kind of covering the Amazon thesis for really the past year now. He says Amazon has 5 businesses greater than 50 billion in ARR: online stores, third-party services, AWS advertising, and subscription. Now, the street only really cares about AWS because of the narrative, but now that the narrative has started to re-rate to a growth quarter, I think that's why you're seeing this type of move. So, I mean, I would be surprised. A lot of people are asking in the chat, and Sam, I'm curious of your perspective on this. And I'm putting Sam's Twitter in the chat as well, so everyone, please make sure to follow him on X. A lot of people are saying, is Amazon a buy right here? I think I would give it a couple weeks to see where it settles in. I wouldn't go FOMO at 250, especially given it was under 220 for the past 2 months. But I don't think it easily comes back to 220. How are you thinking of the stock price right now?
It's such a loaded question, and not saying that's a bad question, but like you can't just ask that question because then there's many factors in this, right? So are you buying it to hold it for a long time, or are you buying it for a trade? For a trade, like I would never chase something like this, right? But for a long-term position, like, yeah, why not? I mean, if you're going to hold it for long-term, you heard every single thing on the call. You had every single CapEx raise on every single mega cap call. The market, or people who are bearish in the market, are looking for every single reason for the market to drop or end its AI super cycle from here. It just does not look like it's ending anytime soon. And that was the case for Amazon, right? They're going to slow down. They get taken over by Microsoft in the next 2 or 3 years. I never necessarily thought that was the case. I mean, maybe Microsoft might start competing with them in like 3 or 4 years if they continue to grow around 40% year over year in terms of Azure growth. But Amazon is now at a $121 billion run rate. Now they're growing at 20%, and that's likely going to accelerate if semi-analysis research is correct, right? So we already had that 20%. They expect it to be around 22% next year. Yeah. I could definitely see that happening. The thing that happened, though, were the operating margins. I calculated, I think it was around 34-point-something%. So it did contract by about 1%. But I think that's kind of expected right now, considering how much overhead there is in building everything out and also increasing the amount of supply to meet the demand. But I'm pretty sure it's not going to go below 30%. If it does, I'll be a little bit concerned, but I don't think it's
real
going to.
Quick, before you continue, dude, operating margins were at 9.7% for the quarter.
That's for the whole business.
I know, but that's down from 11.4. And the point is the fact that the stock pumped and they declined almost 2%.
Yeah.
That just shows you how important AWS was, right?
I mean, it might be a seasonality thing. Actually, no, because if it's year over year, then maybe not.
Last year was at 11%.
Yeah.
It's down 2% year over year and 2.3% quarter over quarter. The fact that the street overlooked that and is giving it a 15% pump is pretty freaking bullish. It goes to your point about AWS margins being the most important.
Well, it's not just AWS. It's also ads, right? So they grew ads by 22%, and Jassy was basically saying it's going to keep growing from here. Like he said, we're very early in the stages. So you have, this is the bear case for TTD. And, you know, I'm not trying to be bearish TTD, but like when you have Amazon partnering with Roku, who's one of the largest CTV providers in the country, and only going to expand from there, who are like, they're literally utilizing Amazon's demand service provider for advertising. And that's Roku, and they're going to be signing up a lot more. And also, advertising is a very high margin business as well. They haven't released operating income for advertising since like the last year, but you could already see it's growing at 22%. And just like AWS, the bigger it gets, the cheaper it is for them to operate at scale. So you can imagine, like with automation and AI and everything, that this is only going to get better for Amazon. Are we going to see 220 again? I don't know.
Yeah, I was going to say the TLDR on this is that if you're buying for the long term, 250 is sure, but if you are chasing, you would not chase at 250. Not after that.
I wouldn't chase at 250. I mean, it's just you're just hoping it goes higher with the market all-time highs. You know, this is like another one of those things. I would say there's probably better things to trade on the short term than Amazon right now. The alpha was before the earnings, but now the market like sees it. It's at 254, 255 right now. So, I mean, it's just very difficult to do that. But long-term, dude, it's like, I mean, what are you going to wait till 220 for a 5-year hold and you're just going to miss out on 10%? Like, it's not a big deal. That's not a big deal.
Yeah, and I would just say psychologically, like we are on the right side of this trade because we bought in early. A lot of the chat bought in early. Again, a lot of the community came together on this. I've been on the wrong side of the trade plenty of times. Not that I'm short or that I have puts, but that I'm just not in it. And it sucks. The FOMO sucks. That's when you have to ask. This is going to be so cliche, but the way I've worked through it over the past 5 years is asking myself, what did I not fully understand about the bull case? And how can I get better as an investor over the lifetime of this career and hopefully be on the bull case, or hopefully understand a bull case for a company the next time, right? So it's really, you got to combat especially in a bull market, because you could lose a lot of money chasing stuff like that and it could really feel bad. So you just have to ask yourself, okay, what did I not understand about Amazon at 220 and how can I improve next time? And then, hopefully that deals with the mentality of having that much FOMO when you get into it. There's another guy who was super bullish Amazon who helped us all understand the thesis. Tanner, congrats.
How you guys doing?
What's up? What's up? Been a long time, Mr. New Bank friend.
Yes, yeah, brother. Man, I can't believe this. This is super exciting. People are understanding that.
Tanner, when did you start buying Amazon? Have you been in here for a minute, or has it been recent?
Last 2 quarters or so. Okay. But really buying in after the last quarter. Semi-analysis, Dylan Patel ended up posting a lot of reports that AWS is actually going to look a lot better than people think. And he has, firsthand insight in, completely into the industry. And, from everything that I was seeing, from ads to the benefits from robotics and full self-driving and artificial intelligence and stable coins, like every technological innovation that I focus on, if you were to put that into like a multi-bubble, like Venn diagram, Amazon's in the direct center of it. And I was just like, man, I need to start building up my position in Amazon. And now we're seeing, a multi-quarter acceleration of AWS. I mean, 20%, they have not seen that 20% growth since December of 2022. And honestly, December of 2022, it's almost September of 2022. It's almost been 3 years since we've seen this level of growth.
And those comps were very easy to beat back then.
Right.
These comps were not easy to beat.
Yeah.
This is the equivalent of NVIDIA reaccelerating its revenue on the data center end right now, which they kind of are forecasting. So that's going to be very interesting to see next quarter.
So Tanner, you started getting excited about Amazon 2 quarters ago. I got excited about a month and a half ago. And it seems like the reason for most people online getting excited about the name is cloud, AWS, and the lack of performance this year. Is there anything else that was really getting
advertising?
You to okay, so cloud and advertising were the 2 core things that you focused on.
Yeah. Advertising is just crazy. I don't know if people are paying attention to all the names that I've been buying recently, but like if you're to go through, I bought Meta on the dip and then it kept dipping. I bought TTD. I bought AppLovin. I just bought Reddit right before they showed earnings, so that was my little.
Oh, wow! Congrats!
That was my little trade.
Look at Tanner becoming a trader. He used to never do this stuff.
I know.
You got a Discord, man. You got a Patreon.
Yeah, you got a Patreon, bro.
No, but you know what? I honestly, if anyone's been following the channel, I've been talking about Reddit for a long time now.
Yeah,
ever since last quarter. Well, okay, sorry, 3 months, but almost every day for 3 months. Been talking about this name. Okay. If you go back and you look at their earnings beat every single quarter, I don't think it's been sub 50% EPS beat. Like Wall Street has just been consistently wrong on this name since they've been a public company, which hasn't been super long. But I just had an inkling. So I bought it like 402 or something today. It was all live. So like you check the receipts. But yeah, so that was my little clip of the day. And then
but Reddit's advertising and advertising in general is what also got you into Amazon 2 quarters ago.
Advertising just in general and especially owning the customer. So that's been very exciting. The fact that Amazon is now willing with their DSP to essentially just go face to face against TTD, pay for those campaigns and say, hey, try us against another third-party company and you see who you like better. That's proving that they're not just bundling their service. They truly believe that like their service is much better. The performance of their advertising is much better than where you can get elsewhere. And this is such a huge target across having a centralized marketplace that is Amazon.com, Prime Video. Like, I don't know. I'm sometimes I get a little overly excited. I just really like Amazon. I'm loving the Mag 7 names right now. It's crazy that the biggest names in the stock market are also some of the fastest growing, highest margin businesses across the board. It's such an interesting time right now where you don't even have to go look for the next speculative startup names. You can just buy the best companies in the world and still find quality and growth.
Okay, so we'll talk more about that. Sam, I know you got a dip, so
yeah,
man.
appreciate you
being
guys. Yeah,
Sam,
thanks for having me on,
Sam's
man.
Twitter right there in the chat. You can follow him. Great analysis, and yeah, thanks for helping us understand the Amazon story.
All right,
dude.
talk to you guys later.
See you, Sam. Have you ever taken a look at Reddit?